Good morning, all. Here is to give you a quick update on gold and dollar yen. There are things that we have to know when wave and structure is developing and how we're to apply ourselves. And because structure can quickly change, we may have a bias. When you have a bias, you have to begin to think about the possibility of what will knock off that bias. The bias is what you hold as something that is going to occur of high probability. Higher probability means that maybe about 75%, this is what you expect. And there must be a reason why you are expecting that. That means you have looked at the higher time frame, you have looked at the weekly and the daily time frame to see that this structure is what is unfolding. Now, to get to that structure that you think is unfolding, there are many pathways to hit. And if you are fixated on a particular pathway, and that is where you base your count on, yeah, it will be what you think it is to you. And once that does not play out, of course, you are messed up and you are confused. Then you think that, oh, maybe this thing is not what it is. Then you have to now, you want to switch to the other pathway. That's what happens. But when you know the principle of how this wave theory works and the structure, and you are holding to it, you are not rigid. You want to see things for yourself. And that's the way to do it. You must know what's an impulse. Now, let me reiterate here that an impulse tells us that what is going up or starting, it's a new trend. So, or let's say you are in a particular trend and it's going, you want to look at it, this, what you call a trend, is it corrective or is it impulsive? So if it's impulsive, you are expecting a 1, 2, 3, 4, 5 wave count. If it's corrective, you are expecting a 1, 2, 3 or ABC, which can go into complexes of WXY count. That's how to align ourselves. But even in a corrective, even in an impulsive wave, when you reach the end of that wave, apart from the divergence that you will notice, the divergence is evidenced by a break of your trend support or your trend resistance when you draw it. But the first thing that will tell us that they are at the end and a new trend is starting is the first impulse. Even if it's going to be corrective, if that new change will be corrective, it will still start with a first impulse. The first impulse is to come down straight and break the primary wave 4. And that is how to know. Having said that, let's look at gold. We have held the opinion that this is not a clear 1, 2, 3, 4, 5 to the downside. Maybe that what that looks like an ABC and a B here and a B here. And most of the time we know that if a wave is coming, maybe it should not break this particular B. And upon breaking this particular B, we thought, are they playing with us? What are they trying to do with us? But this primary B here still intact. Once this primary B is taken here, it tells you that they are, bullish again. So it's still, you still know that it's within corrective format. And the way this Amana went up to the upside, you can make anything out of it. You can say from here to here is A, B, and a C. You can make anything out from it. You can say this is 1, 2. You can say, oh, 3 here and 4 here and 5 ended at this point. So it can be anything. But saying this, we'll still think, oh, are we in a B wave? Now, we now had a sudden drop, a sudden drop. Even if this is a sudden drop, why did we have this? So it became confusing to people. We felt that, okay, it will not break this and will stop. So there are so many pathways to this corrective format. But the thing is that when you see the first impulse and you hide behind the first impulse that you see, because your best entry ever, what will be your best entry ever in anything, either you are trading in the opposite direction, is it to hide immediately behind the first impulse. And so when you do that, you now begin to try to observe what is unfolding. And that's how to trade. When you mark those levels that you expect price to probably hit and change. And that's why I'm kind of having, you know, you must know how to deal with pending orders. Pending order is buy limit, sell limit, or buy stop or sell stop. You must play by those rules with some strict uh, 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 control. Let me use that word with some strict control, which means that because you are busy and you think, oh, this is where most likely, based on the count that you think is involving, that price may change here. So if you don't have the time all the time, you must use tight stop loss in that area because you have not seen the first impulse. You have not seen the reaction before you set it, and you are not in control of the market. I want you to get all this clear. So you are not in control of that market. So you must use a start stop loss or something like is less than even 30 pips or 20 pips if you are sure of yourself of what you have to. So once it knocks you out, no problem. And if eventually you now see that impulse, good, you can plan a re-entry. But if you don't see that impulse and what you are seeing is a correction around that area, it tells you it's going to go up further or it's going to go down further, whichever it is the case. So that is very important. But again, you don't lose sight of what you are seeing on the larger picture. I'm talking too much, right? So now we still see that this is like a W. It could still be a W. This also could have been the end, but we doubt it to be the end based on what we saw on the larger time frame to be the end of this correction. So now, the way we are going up now, this could turn out to be a 1, 2 for more upside, but at the same time, it could turn out to be an A or a W, and all of this an X and a Y to the downside, or you can even say an A, all of this a B, and a Y to the downside. So we still hold those two views, okay? And in that case, when you are holding that view that this could be a 1 and a 2 for further upside, then what is this then? So you can say this may be, the first wave an A, probably a B. Sorry, okay, the first wave, which is a 1, A, B, and a C, and for price to turn to the upside. So it can be that. So what we're now interested in is to look at the invalidation level that this will stop being a 1, 2 for that upside scenario and will now continue to be a W, X, Y to the downside. That is all you can do at this point. But for me, we'll still believe that we are still calling for more downside. That's the view that we have been holding, that we are calling for more downside. And we have to make sure that we see that out. You don't just jump right into if you had been here, fine. You could just continue to watch what is playing out below you. But for now, this impulsive nature may still drag the price down. We may still have a time to correct, maybe a bit deeper or not, but let's see what is happening around this area. If you're going to call this one an A and a C, and this is a B, of what retracement is B to A, I can't see it. So strongly, I still feel like this is an A, B, C for more downside, and this is going to do a Y. Now, the invalidation level here now is that will make this one strongly a Y to the downside. And if that happens, fine. Don't rush it. You still have quite some distance to the downside. If that happens, is once you invalidate 78 or 85 to the downside here. So once we break the low of this primary two here, this is the primary two, you can see this candle here. Once you break the low of this place, then that tells you price is further going to sink down, and it's going to sink down. So where the price is right now, it's in corrective mode. So it could easily be a wave 1, 2, a 3, a 4, and a 5. And it could easily turn out to be something else again. So we have to wait for whatever nonsense they are doing here, and we look at the 4-hour time frame price action and the daytime price action, what is giving us to know if this is still corrective. Are we going to still have a one more push up? If we have one more push up, maybe you could hide there and use this as your stop loss and see if price is going to come to the downside. So that's what I want to see. So I want to see here. So we still technically might be seeing a further fall from gold. That is most probably what is going to happen. But in the interim, we may have some deeper correction or not, maybe without breaking this area before we come to downside. So if we see that, then we hide behind it and, to sell further. If I want to buy, this is not a good place to buy. This is not a good place to buy if we want to buy. So enough of that. So let's look at USDJPY. So we must know how to interpret. In USDJPY, we've been calling just like what gold did. So we are taught that we had reached B has ended here, and we are going to see more C. And we'd call this like a 5-wave structure, like a 1, 2, 3, 4, 5, which truly it is what it is. And all of a sudden, we're not expecting price to break this level, to break here, and price broke this one. And that still tells us how wave can evolve, how things can happen around. So, and people that have been buying here, when you tell yourself this, the limit of correction is around this area, then you exit and prices still continue to go. You exit and you want to enter a sell from here. So that's why what I'm trying to tell us that we don't do that anymore. We'll try to look for the first price action that is going to break down before we'll say we're going to enter into a sell. So we see the first price action, the sharp movement or an impulse, then a correction, then to sell further. Without that, it's not advisable to just blindly sell. So if anybody has been holding here, you still be in this trade. Now, what I'm trying to tell us and trying to teach us is the power of holding our trade. Even if you think that we might be seeing a change here, see the first reaction before you exit your trade. Because if you don't see that reaction, you will be missing out, really. You'll be missing out, really. So even if you see the first reaction, which is the first impulse at that interchange, then you can exit on the correction. That's how to do it. But that's okay. Let me set my TP here. You know what it took you to be in that trade, and you easily left the trade. You plugged in for the opposing side, and which is not, you lost some money. Then you are also you lost the opportunity to ride with the trade because it's still continuing. So we have to learn all of that. So by the rule, the first impulse that we expect from the point of a change is what determines when I want to exit and where I want to exit, one. and where I want to come in again. So if at those points, at those levels, we're not seeing that sign, then let's do the trade that we are doing that is going. Let's continue with it. Now, what now is, can I see here? In as much as dollar yen had gone so much high before we saw this move to the downside, this to me still looks not complete to the downside. So what I see now is I see that wave B has not ended, and wave B also is going up in probably just like gold, that what gold did is still going up or down. We are still coming down. So I see this as an A, as a B, and a short C. As a matter of fact, I see it more like when you take this to the downside, from here to the downside, you mark, you take your mark from here, you look for an equal length of this from here down, and if you place it here to here, so this length is what I think we might get here around this area before we come to downside. So this point is where I expect price to get to before we come to the downside now. So we are still riding a B wave, So it has changed the count completely from when we thought that B, this is an A, and this is a B, and we are doing a 1 of the C, and we are going to see a 2 of the C. That is off the table. So what is now still happening that this is still a B, this is still an A, B, and we are still yet to see the C to the downside. So not until 85.6 is broken to the upside, then that negates it. We can see, because it's corrective, we can still get to 88 or 90. So you must know that if you get to 90, then we are talking that we might have a regular flat. So 90, 88, they are still within the ambience of a regular flat. Even 85, if you get 85 can make it a regular flat, which is an 100 extension, or a zigzag, which you can still ride to a 161.8 extension to the downside. So that is what we are left with as an option now. So what I said is that an 100% extension or size of this is what we are going to get for a B. If I bring up my drawing, so that is what I see now. So we have an A, we have a B, and the B inside here probably is running a 5-wave structure, probably a 1, 2, 3, 4, and a 5 to finish that before we come to the downside. So if you look at that, we are looking at this 2 area as a strong place that we may have a reaction to the downside. And if we get a first sharp, an impulse, then we are good to go. And then we now look for, an entry. If you don't have time and you are setting a place, an order around this area, then you have to use a very tight stop loss. If you are putting an order around this area, this looks like a strong area, and this is 85 extension, retracement, and this is 90 here. So 90 is almost capping this area. So between this area and this area is where we are expecting a reaction to occur. So if we do get that, then we'll be going down without coming here. So if we should come here, we are going to break up. Then it will change the whole thing. Of course, it might still be an A, and if it breaks above it, then we are looking at a likely a running flat to the downside. We must still get the correction to the downside, which is a running flat, and we'll go up again. So, but not until we get that reaction. We need that impulse. We need that impulse now. Our price had broken 78 to the upside from this yellow. We're doing a yellow candle now. To this yellow. So 78 had been broken to the upside. So this is at 85. This is at about 88. So 90 even is still possible, which is slightly above that level here. So you can still mark those. If you can mark it at 90, that's 88. So this is 85. 90. So anything above 90, we're going to break the top. So we can get reaction anytime soon. That's what I'm saying on dollar yen. So looking inside of the immediate wave that is playing out here now. So what do we see? So we are seeing this reaction here. This is not the first impulse. The way it's coming down. This is not the first impulse. It has set wave 4 correction around this area. So we maybe have done 1 and a 2. We may be seeing a wave 4 build up. We may have finished a wave 5 here now. I mean, sorry, wave 3 here now. So that's what I'm seeing here, except we break the limit of that wave. Is impulsive, then we don't expect it to break 38 to the downside. If it's corrective, it might get to 50. So it's impulsive in itself. So 38 is around this area. This is 38 here. So it's around that area. That's huge. But I doubt if we'll get all of that. That's huge. I don't think so. In terms of this move, I don't think so. We might have to first see what is going to happen immediately here to the primary 4 here, if price is going to break it or not. So that's the primary 4 in that place. I'm just trying to tell you, because some things are very difficult to, explain and why they change. So that's the primary 4 in that place. So, and if we should have a break below this area, then the price, because it's not impulsive coming down right now, it's not a sharp drop. So that means we may be breaking the top if that happens, but it's still, we'll still have some time. Looking at the whole of this 1, 2, 3, probably 4, 5, then looking at the immediate wave here, that's another thing that we have to look at. Let's go into the 1 hour time frame. Looking at from here to this point. So from here to this point, we can see a 1 and a 2 around this area. So we may have finished this the way it's coming. The primary 4 is broken of the 3, the third wave itself. So this is the third wave from here, from this point here, 1, 2. This looks like part of a 3, 4, 5 here. That's so breaking here shows clearly that we may be correcting deep, a deep fall. That means wave 3 of this move is completely gone. Of this immediate move from here to here, the wave 3 is gone. We want to do a 4. So if we want to do a 4, so this will be that second wave here, just below here. So if just below there, then a 38 or a 50 is impulsive. Then he probably will push this to this area. So push that to this area. Push that to that area. You should be expecting reactions without breaking this area. 50. We should be expecting reaction around that area as the fourth wave. So if we see that reaction around this area, then anybody can take a buy to this area until we see a reaction. So we don't know, we might still get that. From what I can see now, that's about 200 pips. We may get that. I don't want to sell it from here because this is highly corrective. I don't want to sell it from here. If this is not corrective and we are changing trend, this will first drop like this. Drop hard to break all of this. Drop hard to break all of this. Then they might do small correction in between, come here to break this. So if they break this, the whole of this wave is gone. So once the whole of this wave is gone, with a first break of this one will go, as it has gone now, but it's been corrected over, now. So this one will go up to this point. A little correction, drop hard around this area, a little correction, drop hard within the same day, and price may come here, break this area, and the next correction is where you're going to look for your sell. And that is not what we are getting here now. So it is not yet time. Whatever we do here is going to correct, probably correcting with 4 for more upside. It might just be that we are done with this. And with that, I've come to the end of the update. Bye.